All right. So if you've been following me for a while, you notice that I've been talking a little bit more on Bitcoin. Today we'll be looking at Great British Pound, United States dollar. Recently, I've been using AQZ fibs, created by a good friend, Octava, and a business partner. I traditionally teach in the mentorship class daily order blocks. Is an easy way of trading, and even if you're a professional, busy professional, you still will be able to trade the daily order block. GU here is a very good example. For instance, here we have this low responsible for this high. When price revisited this low, price pushed up, right? This low, the bearish candle, was responsible for that high. When price revisited this bearish candle, which is the bullish order block, price pushed up, created a new high here, right? Now we have this order block that was responsible for this high. So when price was revisiting this area, some of the students in the mentorship class, the fostering program, were already looking for buys. So in the fostering program, we'll basically have 3 buy entries, one at the body of the bearish candle, which is the bullish order block, at the middle, right? Basically, we'll pull this down to the body, and we'll have another one at the close, which we call the mitigation. And when price picks up, stop loss will be somewhere beneath. If you trade on the daily time frame and you're a busy professional, you have to create time. You have to be willing to accept wide stop loss down beneath. And we're presently trading. Our first take profit will obviously be at the tip of this bearish order block. Basically, we're at TP. If the uptrend remains true, we expect that for this to be an uptrend, 3 should take out 1 and 5 should take out 3, right? So if we bring this, if we superimpose this drawing here, right, we will be expecting 5 to take out 3. In other words, at point 3, whatever longs we have, we'll be collapsing them all. Even though fundamentals might be telling us we might be expecting some drop because tendency DXY could pick up strength. But keeping true to the strategy, TP1 at the point where my cursor is 1.36388. Right, so let's see how we frame this for people who are not busy professionals per se, and full-time traders, or people who have more time to look at the charts. We'll be framing this up in a different way. First thing I usually tell my students to do is to set an alert, right? So you have a crosshair, you simply just go to the settings of the crosshair, add alert on horizontal ray, you add an alert on the horizontal ray, and it could be price crossing the horizontal ray only once, right? You could do that and create the alert. When you create the alert, it will send a push notification to your TradingView app. If you have the app on your mobile device, it will. If you also need it to send to your email, it will send to your email. That is one way to ensure you don't keep staring at the charts. Now, when price approaches, or when the alert goes off, you now begin to go down to the lower time frame to look for reasons to go long. Again, if you're following me on YouTube, Simply Pips on YouTube, I've explained this over and over again. I'll quickly do a short run on this. So if price is making higher highs for a buy, and I'm looking at buying, say at 0.4, I would be anticipating a downward move from 0.3 to 0.4. My entry for a buy will be when there is a break in market structure, which we call a breaker or an LSB. So price has been trending downwards from this point to point C. I want D to close above B. Then upon a retest of it, then I can take a buy, right? So that's what I want to see. Basically, this is my move up and this is my pullback down with the brown Elliott wave there to the downside, and we'll now be looking for buys. So how do we frame this up on a lower time frame? First is that we note out our order block. You could use AQZ fibs, for instance. You fib from low to high. Anywhere within this deeper blue shaded area is a buy, and our preferred entry will be the AQZ zone here, right? But anywhere within this region, we will basically be looking for buys. So one way you could do this is you could box out this region. That is your buy region. You could use any method you are comfortable with, ICT, whatever the name might be, to frame up your entry. So you could go down to 4 hours and frame your entry even better, right? So if I'm framing my entry on 4 hours, I would want to look for voids or fair value gaps that has not been filled, and I'll anticipate price to come there and fill them up. So I have this region here. Did price fill this fair value? Right, price didn't. Oh, it's I think it did, right? Fill that. Then I have another gap between this region to this region, right? Did price fill that? Oh no, price didn't come back to fill that gap. So I'll be anticipating that since price didn't fill up, I think I should use a different color. Price didn't fill up the gap here. I'll be anticipating price to come fill up. So I'm basically talking about the gap between this point and this level here. Price didn't fill up that. So I can basically delete my daily buy zone, and I have my region for which I'm expecting price to fill up here. Okay, so I'm expecting price to fill up from that zone. Just a minute. Uh-oh. I'm expecting price to fill up that gap here. And that was exactly what price came to do. Now, I must state here that using gaps, fair value gaps, voids sometimes can be very, very confusing, because you could have multiple voids, and then the question becomes which void will be filled and which wouldn't be. So I typically use an LSB on the lower time frame that falls within my buy zone. When I find an LSB on the 15 minutes that fall within my buy zone, I'll take it. If it gives me TP1, I'll take the TP1. It comes back to my entry or hits my SL thereafter and gives me another LSB, which is breaking structure on 15 minutes. I'll pull the trigger again. Sometimes, or most times, retail traders work under this false assumption that they could predict with high sense of precision what the market will do. You might do it some of the time, but retail traders end up failing miserably most of the time, and that is why we have that disparity in terms of number of people who win and number of people who eventually lose. So, right, so the concept is that we are in a buy zone. Again, from the daily, we had our AQZ fibs giving us an idea that we are in a buy zone from this point to this buy zone. We know that the upper region is our buy zone. So let me pick that there. The upper region here is our buy zone, and we're anticipating buys. Even up to this point is a buy zone, right? Because this is the preferred entry, the PE. So we're basically looking at buys from this region. So whenever price comes into this region, we will be looking to buy. Now, the next thing we need to look at is price and time. Price and time. We will want to find our low of the day, the LOD, at specific times of the day, which we call the kill zone, right? The kill zones, BTMM traders may call it the Brinks box, the whatever you want to call it. We have price and time. There are times LSB could happen during the odd hours, perhaps an Asian session. You could take them, but precisely if you're trading GBPUSD or pairs that are not Asian in any way, that is pairs that don't contain AUD, NZD, and JPY, pairs that are typically London and New York related, you might want to wait for the low or high of the day, as the case may be, to form at least at the open of those trading centers, right? So if we go down to M15, which is typically where I pick my trades from, we'll go down to M15. You would want to see what price does. So basically, on the red line, you would have gotten an alert indicating that price has approached your buy zone, right? The alert would have come up around this time. I am in UTC +1. This is a little above after midnight and it's outside my kill zone. So my kill zone typically starts from around 8 a.m. UTC +1 or 7 a.m. UTC +1, depending on daylight savings or not. Right. So here, my kill zone would have started around 8. Right. So somewhere around this point will be my kill zone. If you use the BTMM template, you have your Asian zone, Asian range covering something like that for your Asian range, and price traded to the downside. Right. We're not discussing BTMM anyway. So notice how price came nicely to our buy zone, which we framed up from the daily H4. And I mentioned that you don't have to do the H4. Once you get an LSB, you take your trade within the kill zone. Okay, so here we are. This is let's magnify this a little. So no doubt about what we're saying. This candle here is the last bullish candle responsible for this low. The last bullish candle responsible for this low. So what we'll basically do is that we'll box up this candle, right? The last bullish candle responsible for that low. We'll box that out, right? So if price closes above it, we'll be anticipating a retest of that zone to buy. A retest of that zone to buy, and this will be our buy opportunity for this trade, which actually delivered well. But like I mentioned recently, I started using AQZ fibs in our AQZ FX. I really want you to look at that. I should drop a link somewhere within this broadcast, or I'll type it up here, and you could look it up. Right, so if you're using the AQZ, you fib up from this high. Sorry, you're buying. You fib up from the low to the high. Right, you fib this, and you would be anticipating price coming to your preferred entry, right? And then from there you take your buy. But remember again, our buy zone is between this deep blue area is our buy zone. The top blue, deep blue area is our buy zone, meaning that we could have had two entry, the same entry we had for if we're using the first method, the LSB method. Price went straight to TP1, came back towards preferred entry, gave us a bullish engulfing candle, which is a sign to go in, and would have gone in again. Now let's see how this would have played out in terms of risk reward ratio. So if we're going long here and say we had our entry somewhere within this point, our stop loss would have been tucked slightly below the lowest point, the low of the day. And when price got to TP2, we're 1.3% or thereabout up. When price got to TP3, we're 2 point, some slightly over 2% up. When price got to TP3, we were 3% up based on the RICS. And when price got here, we're basically approximately 4% up from our entry. We're basically 4% up. And this is how we trade using the daily order block. There's several examples we could do. Let me see if I can do one more before we call this a wrap. We're running out of time on AUDJPY. Again, another student pointed this out. Let's go down, take off all drawings, and go back again to the daily. All right. So here in the daily, we have another last bearish candle responsible for that high. When price trades back into this candle, we will be looking for reasons to buy. So anywhere within this candle is a buy zone, right? So you simply look for an LSB on the lower time frame to take this trade. Now this is AUDJPY. Simply means if I get an LSB in Asian session, I'll take the trade. If we're to use our AQZ fibs, you fib from beneath, above, and anything within the upper blue region is our buy. So we got a buy straight to TP1. Again, just like with GU, when price trades into a bearish order block like we saw here, we would be anticipating some reaction. So we take off some profits and allow the remainder to run at break even, because we anticipate that price may actually come back to preferred entry and then bounce off, right? Taking out these highs. And if price breaks beneath preferred entry, then we would be looking at selling, right? So ladies and gentlemen, I would suggest you look us up on Simply Pips. Just a minute. Right, so that's the channel Simply Pips. Look for Simply Pips on TradingView, and we also have the AQZ channels where we discuss a lot of things, drop a lot of setups daily, hitting TP. You need to join these channels and see your trading move. If you are interested in becoming a prop trader, perhaps with CTI, FTMO, whatever the name is, we'll be starting a fostering program coming up the last week in February, and it's going to last for 3 months. We'll take you through the fundamentals, the technicals, the psychology of becoming a proprietary trader. Bye bye.